All right, so talking to analysts from a lot of big banks, they say that hedge funds were among the first to sell their treasuries and also some of the first to sell tech in an effort to get some liquidity when all this volatility started. Is that what your data is showing as well?
Yeah, it is. And I think what you see generally is that hedge funds net performance is between 30 to 60% net. And I think you've seen them trend towards the lower end of that range, 30%, maybe 25% exposure to the market over the past 2 to 4 weeks.
All right, so that's what you're seeing the last 2 or 4 weeks. When we look at the dollar in particular, the dollar's declined about 4% since those tariffs were announced back on April the 2nd. What does that do to the portfolio of a hedge fund? What does that do to their long-term planning?
Yeah, absolutely. I believe that most hedge funds have positioned for this volatility and have positioned for the recession. And you think about the dollar trade and the fixed income that's really come under pressure. It really more recently than the equity market volatility, you're seeing that where the volatility is not just associated with the huge equity market swings that we've seen, but also the fixed income in the dollar trade as well. And all of that is playing into the performance dynamics we've seen. We've seen defensive outperformance over the last couple of weeks to the tune of approximately 10 to 20% of the daily volatility that we've seen in the overall equity and fixed income markets over the last 2 to 3 weeks.
So, Ken, I don't know if you read the Journal today. They have an article, 5 things to watch for signs of market trouble. One of them is a sell-off when we're talking about the 30-year Treasury right now. When we're talking about hedge funds, how are they positioned when it comes to treasuries? Are they more positioned on the long end of the curve, the short end of the curve? If we see more volatility, is that where you would expect to see selling when it comes to fixed income holdings by hedge funds, the longer end, things like the 30-year?
Yeah, in terms of hedge fund positioning, you're going to see it across the treasury curve, probably more so in the long end than the short end, but you also see a tremendous amount of positioning associated with corporate fixed income as well. And really, as you've seen this interesting situation where you've seen credit spreads widen a week ago because Treasury yields initially, when the equity volatility started, you had a huge flight to quality, and now you've seen fixed income come under pressure really in the last 4 to 5 days, and that's continuing today with the 10-year up around 10 basis points as we're opening the market here.
So, Ken, we're asking a lot of questions about the volatility and kind of shakeup in the market. I do want to point out one thing, and it's important to point out. According to your data, hedge funds have outperformed the broader market throughout all this volatility. So when you're talking to a lot of hedge fund managers, how do they plan to continue that relative outperformance lower, but doing better than the broader market?
Yeah, absolutely. I mean, the positioning is very tactical, and it's evolving really not by the week, by the day, or by the hour. And so what you hear from somebody yesterday can change by today. And that's just the reality. The new reality of the market is that people are trading these markets very aggressively. And we've seen just this unprecedented surge in daily volatility that we haven't seen in at least 5 years. And that really brings to me what we were talking about with our tail risk index that we're bringing out this week, that really focuses on funds that own tremendous. They basically go out and buy a lot of option premium, and they wait for an event like what we've seen the last week, where you have a huge payoff, you have a negative carry in terms of the cost of the options you're buying, but you own a tremendous amount of options. And when that volatility surges, when that realized volatility surges, you see big performance gains.